J.C. Parets, founder of Eagle Bay Capital, 10-year veteran and market technician.
Hi, this is JC.
J.C., it's Joel and Dennis here at Benzinga. How you doing on this Thursday morning?
Good morning, good morning. I'm doing great. How are you guys?
We're doing good. We're having a lot of fun on the show today, talking about a lot of different stocks. And boy, oh boy, do you drink K-Cups at all? Are you a coffee drinker?
I am a coffee drinker. I'm not very, I'm not picky when it comes to my coffee. As long as it's not Starbucks. I just don't like the Starbucks. And Dunkin' Donuts gives it to me too hot. I'm old school. I like the street guy in the corner.
Okay. All right. We're bringing that up. GMCR, Green Mountain Coffee, getting roasted here this morning. Just getting plastered here. Do you ever look at this thing like a little contrarian play or something? Or it's just better places to put your money and you just move on?
Yeah, I mean, I think it's great. I'm happy it's getting crushed. It should be. Stocks trading below a downward sloping 200-day moving average. We don't have any momentum divergences, positively anyway, on the recent lows of the last month. So there's really no reason to own this. We're below the former resistance from 2013. So, me. I mean, I like to look for mean reversion opportunities, if and when they're there, and this is just simply not one of them. So I'm happy to see it get crushed. I think it's great. How low can it go? I don't know, man. We're looking at, we're down to 54 now pre-market. I mean, maybe if it can hang on to those late 2013 lows around 56, 57 on a closing basis, maybe. But that's all I see.
What about Twitter here, JC? The stock we were just talking about before you got on the show. It can't catch a bid. Market rallies nicely yesterday. Twitter is one of the only stocks that I see red on my screen. It seems like every day this stock is down lower. We're up a little bit here this morning. Twitter is down here again. What are your thoughts? Is it starting to get oversold?
It's been oversold since April, so I mean that it really doesn't mean anything. Again, this is another good one. I'm happy to see this. I think it's great. Because you got stock trading below a downward sloping 200-day moving average. We've been pounding the table since April that this was dead money at best. You got to sell any strength, and then the noisemakers come out talking about how they're going to get bought out and how great their sources are and this and that. And as usual, supply and demand is more important than whatever sources these guys are talking about or making up. And you got that pop, you got it last month, and you got to fade that pop. And we've gotten absolutely destroyed. So since the noisemakers were pounding the table about a buyout, stock's down 30% in a couple of weeks. So I think it's great. There's no bottom in sight. I mean, we're talking all-time lows, so you have zero support. I see no reason to be involved with this. I mean, you got a stock market that's sitting a couple of percentages away from an all-time high, and you got a stock here that's hitting all-time lows. It's just, when you look at the universe of stocks, is this the one that you want to buy? Right?
Don't have to be a genius on that one. Another stock, JC, that you've just been all over, very accurate on, has been Apple. And you just said there's more risk to the downside than there is to the upside. Couldn't catch a bid off the earnings report here. Giving it back, loses the 200-day moving average, loses the pre-earnings low at 119 and change here. Is it getting your interest yet on the downside, potential long, or just still stay away from Apple?
Yeah, I mean, again, we've been talking about this since February, how there's zero reason to be in this. I mean, this has been dead money at best. The opportunity cost has been through the roof. Coming into the year, and we just talked about it on the show every Thursday. 129, 130, that was our target for multiple reasons. You had multiple Fibonacci extensions clustering there. There's a reason why that was our target. There's a reason why since then we've stayed away. I mean, you want to talk about consistency. I mean, there's been no reason to be involved. And then I got to tell you, once it hit that level, we had a sideways consolidation. And when that resolved to the downside, that's bad. When you have, these sort of consolidations that are sideways, theoretically, these are bullish. These are healthy in nature. And when bullish patterns resolve, negatively, the market is speaking and the market is telling us, to really be careful. So, like I've been saying since February, I still see no reason to be involved with this. I would be fading any strength at all that we see. I guess the only, trying to be a little bit more optimistic here, the only thing I guess that could make me, even consider putting on a long for the first time since February, I guess maybe if we're holding on above 120, maybe. But even then, there's just still so much overhead supply above that the risk reward still wouldn't be worth it, and the opportunity cost would still be through the roof. These new lows were confirmed by momentum, so we don't even have any bullish momentum divergences in Apple. So, realistically, I think you keep fading strength. We're probably heading down towards 105. Bad to guess.
JC, thoughts on Clorox, CLX, and this isn't a stock we talk about every day because usually people are just sitting there for the dividend. It's kind of boring. Not boring the last 3 trading sessions. CLX has rallied from 110 up to almost 119 here yesterday. This has been an incredible move into some defensive consumer discretionary issues. We've seen it kind of across the board besides Procter & Gamble, which can't seem to catch a bid, but CLX is one that has been catching a bid. What are your thoughts here? Like, is this, just defensive, money moving defensively, or why so much interest all of a sudden in a company that makes bleach?
Well, I mean, the staples have been looking great. Consumer in general, both staples and discretionaries. I mean, that has really been, an absolute monster. After a nice consolidation, staples were getting new highs. So, I can't say that I'm surprised. But I mean, it is very impressive. I got to tell you, for some reason, my chart all of a sudden decided to not show up. So let me go over here just to get some price perspectives. But yeah, I mean, beautiful breakout across the board. Here we go. Yeah, I mean, over the last few days, I mean, this thing has really been a monster. We're approaching, as we speak, we hit, the consolidation that we had in Clorox really since early February. The measured move based on that consolidation is a little bit over 118. So we hit that yesterday. So I wouldn't be piling in at this point. If you're in it, I would actually be taking profit and kind of letting things settle, especially over the last 3 days. But, once we got above those February, March highs, 118 and change, that was the price target. We hit that. I would back off. We're extremely overbought. Not that that's a bad thing. I would actually consider that a good thing. We had some bullish momentum divergences at those lows down in June, upward sloping 200-day moving average. All of those are good things. Notice how well this is behaving, and look how quickly it hit that target. And notice how it's the exact opposite of Twitter. Notice how it's the exact opposite of Green Mountain. You got a market hitting, sitting at all-time highs. You want to be buying stocks that are hitting new highs as well, not bottom fishing. Not looking for the worst of the worst, hoping for a bounce. I'm happy to see things like this. As happy it makes me to see Twitter making new lows, it makes me just as happy to see Clorox making new highs.
All right, Tesla had some numbers out today, got a pop and then a drop. I know you haven't been a big fan of this issue over the past. What are you thinking now? Pull back off highs, short or long candidate for you in this one, or hands off?
Well, it's not so much that I haven't been a fan. It's just that, I like to be disciplined, and when stocks are trading anywhere near a flat 200-day moving average, I mean, it just screams lack of trend. You get failed breakouts, you get failed breakdowns. I mean, it's just a mess, and it really creates headaches. Who needs headaches, right? And I think this is a good example. We hit a new high a couple of weeks back on July the 20th. And that new high failed, and here we are sitting 20 points below that. And this is very characteristic of flat 200-day moving averages that are telling us that there is no uptrend. So although, yes, we've been trending higher since March, and that's been great, and if you've been in that, terrific, good for you. But it's just not for me. It's not anything I would ever do. So... And this is a good reason why. You get these failed breakouts, and, who needs that? So what would I need in order to get constructive? I would want this 200-day to start sloping higher. We bumped up against this 280, 290 level twice now since last September. So I think that there is a decent likelihood that we break out. But, let the smoothing mechanisms catch up, is what I would say. I would continue to be patient. But I think that the sell-off today is probably a good thing, well-deserved. And I think that once the 200-day starts to catch up to price, I think that we could probably get a breakout. But not anything I would be buying tomorrow or today.
JC, let's also take a look at some other stocks that have just been getting the beats lately. ExxonMobil, good dividend stock here. I guess let's talk oil first, and then see if getting your attention here in any of these oil stocks.
Again, getting back to buying the garbage and the worst of the worst as we're sitting at all-time highs. We can start with oil if you want. We're making new lows. We don't have any bullish momentum divergences. I mean, this is just a mess. The time that we wanted to be buying it, we were pounding the table on the show. We're talking about, mid-March. That's when we wanted to be buying oil. As we broke below the January lows, got back above it, we wanted to be buying oil in the mid-40s. That was a great trade. Once we broke the uptrend line from the March lows, that was it. There was no reason to be involved. We broke the uptrend line. We had our mean reversion, downward sloping 200-day moving average. This is still in the middle of a crash. There's no reason to own this. I don't care about your rig counts or what's going on with Iran, or the market doesn't care about any of that stuff. The only people that care about that stuff are people that get paid to make noise and sell commercials and things like that. The market has zero interest in any of that stuff, and we're obviously, seeing that as we speak. In terms of execution, is this something I would be buying here? I mean, no. I mean, I see no reason to be buying this. I mean, I think we're probably heading, maybe back down to those '09 lows. I mean, I don't see it. It's not there for me. Could we get a bounce for a day or two? Sure. I see no reason. I don't see, me, I like to look for, when prices are making new lows, I like to see momentum kind of putting in higher lows, and we're not seeing that. So in terms of bottom fishing oil, not anything I would do here at this point. And in terms of the oil stocks, I mean, I see even less of a reason. I mean, this is just a complete disaster. I mean, you look at Chevron. Chevron's down 15 weeks in a row. 15 weeks in a row. A company like Chevron, and you got people that are in it for the dividend, and the dividend keeps, the yield keeps getting bigger, but it's not because they're making more money or whatever it is. The dividend keeps getting bigger because the price keeps going lower. So in terms of shorting it at this point, I wouldn't be sure. Look at Exxon, for example. Exxon just hit $78 this week. That was our downside target based on the 161.8 extension of the March to May rally. So, that target has been hit from a short perspective. And, on these new lows, we could potentially be seeing a bullish momentum divergence. Is it enough for me to buy it? Man. You're really digging in this garbage right now. I mean, again, getting back to the Twitters and the Green Mountains of the world, with the market sitting at all-time highs, is this what you want to be buying? The worst Dow components of all 30? And you know me, I look at all my Dow components, I look at all 30, and by far and away, nothing's worse than Exxon and Chevron. I mean, IBM's pretty terrible, but Exxon and Chevron are by far and away, horrible. I mean, these are stocks that last year, you look at Exxon. Last year, Exxon was at $105. This was in August, a year ago, and here we are at 77. I mean, you want to talk about a disaster. And these aren't like, little garbage companies like Fitbit or, Etsy or, any of these, little tiny, companies. This is, we're talking about what was just recently the largest company in the world, in ExxonMobil, and, is down, 30%. I mean, you want to talk about market capitalization evaporating, in a year. I mean, You're talking about hundreds of billions of dollars just gone. See ya. So yeah, would I be buying this? No shot. I would be fading any strength. I mean, maybe if we're holding above 78 and you want a short-term trade, maybe to 82 or something like that, and you really want to, you really can accept that sort of aggravation, go for it. But for me, it just doesn't make any sense to be buying the worst stock in the Dow with the Dow sitting a couple of percentages from all-time highs. I mean, does that make sense to you guys?
No, it doesn't. I completely agree with you. I mean, the trend has been your friend here, and the trend is down in this case. So I agree with you on the fading the pops. What are your thoughts? A related sector. We got about a minute with you. What about the solar stocks here? I mean, you've got a lot of them that have been beat up, but then First Solar just came out yesterday, had a great quarter, had a nice $7 lift here. It lifted some of the other solar stocks with sympathy there. Solar City's been holding up well. I mean, if you were just sitting back and thinking about, well, if oil's getting weaker and oil's getting cheaper here, maybe, there's not as much interest in an alternative energy. Maybe, you would think that would bring the stocks down. But it really has been the case over the course of the last month here because some of these solar stocks have actually started to catch a bid.
Yes. I mean, catch a bid. I mean, they've gotten destroyed over the last 2 months. I mean, you're talking about a sector that's down 30% in 2 months. Again, with the market sitting at or near all-time highs, you get a flat 200 period moving average. I mean, sure, can you get a mean reversion to 39 or something like that? Potentially, I would be a seller there. I mean, this, again, getting back to the same theme we've been talking about this whole time. You're talking about a market that's sitting at all-time highs. You're talking about a sector that's, very near 52-week lows and down 30% over the last couple of months. I mean, again, are these the headaches that you want in your portfolio? Can you get a mean reversion back towards 39 or 40? Sure. Is that a 10% move? And can that help your portfolio? Of course. But where do you put your stop? I mean, where are you wrong? Again, these flat 200-day moving averages, look at First Solar, perfect example. Here we are at a downward sloping 200-day moving average. You had a nice gap higher yesterday. But now what are you going to do with it? I can't be in this stuff. And the long-term trends are still down. These are tough trades to be in, man. Real tough. This is like the opposite of what you're seeing in Clorox. And I'm glad that you brought that up because I don't want to be gloom and doom and all this stuff. But all the stocks that you're telling me that we're bringing up are all sitting at 52-week lows with the market at an all-time high. So I don't want to be Mr. Gloom and Doom, but I pride myself in telling it like it is. And if you're asking about a stock sitting at all-time lows or 52-week lows with the market at an all-time high, I'm not gonna be
real quick,
about it,
JC. Real quick, I got a question for you on our explanation, a little education. You talk about the 200-day moving average. You mentioned quite a few times bullish momentum divergence. Do you have a quick chart I can pull up to get an illustration of that, or just give us a quick definition, get a little education here, and before we let you go?
When momentum, and for momentum, I personally use a 14-period relative strength index on RSI, and I use that regardless of the time horizon, whether we're looking at daily time frames, weekly time frames, or 10-minute time frames, and those are generally the time frames that I look at, particularly daily and weekly. I rarely look at intraday charts. It's not for me. But when prices are making new lows, and you want to see momentum making new lows as well, essentially confirming that trend, and we're seeing that in the majority of the stocks that you just asked me about. But when you see momentum putting in a higher low, when prices puts in a lower low, that's what we call a bullish momentum divergence, and that's a signal that, hey, maybe we can take advantage of this for a mean reversion. Getting back to crude oil, look at crude oil back in March, and look at a 14-day relative strength index, and look how in March prices made new lows. They took out the January lows. Price made new lows in March, and RSI put in a higher low in mid-March. And once price got back above the January lows, that was the entry point. And I'm not going to say it's a coincidence that you got the bullish momentum divergence and a beautiful mean reversion along the way. I mean, they go hand in hand. I've seen it a zillion times.
Great explanation. Thank you. JC Parets, founder of Eagle Bay Capital, joining us here every Thursday on Benzinga's Pre-Market Prep. Great information as always, JC. Thanks a lot. We'll talk to you again next Thursday.
Thanks again for having me, guys. Have a good one.